Hello and welcome to this very special edition of Crystal Ball. It's special because of the timing. After a long time, there's been a bit of a scare in the market. We've had corrections, ongoing corrections this year, but this time the market's fallen about 10%. Many high-quality stocks are down 20-25%. And for the first time, there's a little bit of a scare going around about how late earnings are taking to catch up. And weighing in on the margin is that MAT issue on FIIs, which might have acted as a bit of an irritant or trigger to this correction. My guest on the show today is Samir Arora of Helios Capital to explain what has led to this correction and whether this is a buying opportunity. Samir, very good to see you again. Last we spoke, I remember you telling me that you're bullish but not as bullish as 2014 because of how much the stocks have gone up. Now that prices have corrected about 10%, have you become more bullish? Have you increased your net long position?
Well, we have increased our net exposure a little bit by 5-7%. But my bigger picture thesis remains that some sectors are quite okay and you can say good, but some sectors are very bad in terms of stock market expected performance. And therefore, we call this, as compared to 2014, which was a long-only kind of environment, this is a perfect long-short kind of an environment.
So, before I come down to what's long and what's short, do you think markets have corrected enough, or do you see this market drifting down lower?
No, I think at a market level, I think has corrected enough, and I feel that one of the bogeys was this MAT issue, which was created by the government and then hopefully now a little bit resolved by the government in terms of its scope. But I still feel it a bit sad that when the finance minister and the junior finance minister keep emphasizing that India will have 21st century management or whatever you call it of income tax, not just the policies, that every now and then somebody brags in the press at how they can go after the FII, how they can go and pursue 6 years. Maybe they can, but I don't think India or anybody should be bragging about these things. You may do it at some level, okay, what can be done, but to go into the media and say that it is allowed and it is a right and it is a policy and this is, there's no need. Even today it came in the papers from some unknown sources. People who can't talk openly but still go and brag about it, that it is their sort of birth given right to do it. I mean, whether you do it or not, whether it's allowed or not, it is not right conceptually. Of course, legally if you want to do and it can be done, there's no need to brag about it.
How much of an irritant has it been, Samir, in your eyes? From people that you speak to, your peers said, do you think a significant part of this correction is because of that, or the recent outflow that has happened from FIIs is largely on account of that?
That's very difficult to say because the people who get these notices don't tell the others directly. But secondly, because it is not going to people who are from tax treaty countries, so mostly Singapore obviously and Mauritius and all, which are the larger part of India-oriented funds. They have not got these notices, thankfully. So it is not so much that whether the amount, and of course the amount initially was inflated to such a big number of $6 billion, which would have meant that it's a big deal. Today I would think it is philosophically wrong, it's conceptually wrong, it may be legally right or wrong, courts can decide, but it's morally wrong that for 2009 where people have come and gone, nobody even has to explain how it can be done, forget about whether it should be done or not. So it's philosophically wrong now, whether it's legally wrong or right, courts will decide. It must have caused irritation, and people who get the notices obviously will be upset. And on their behalf, others can also be upset a little bit that it is, not the way we should be doing business. But I'm thinking that now it's a bit contained because the size of the notices they said was only some 260 FIIs and some 600 crores, and that they will clarify more about applicability of MAT to other categories of income and to other investors. So I'm hoping that it is over. But it is not a good thing.
What about India's recent underperformance relative to other emerging markets? I know it's a very narrow period of time to gauge it by, but over the last few weeks we've underperformed quite significantly. Is that creating any kind of strain or any kind of impatience amongst global investors, you feel?
I don't know that because, we are India-oriented and there's a lot of interest in that. But it is possible that for somebody who's Asian fund manager or emerging market fund manager, seeing the difference between the performance of India versus, say, China, even Russia, Brazil, even Asia, Japan, that they may try on the margin to allocate from here to there to try and catch that. In a big picture sense, anybody who moves around this fast is going to be a loser. And that's why most of these funds underperform. Because when last year India was doing well, they would be trying and bang money into India. And then suddenly, when China is doing well, they try, if they are trying, to reduce here and go there. In a big picture sense, for somebody who's coming completely afresh, India looks a much more sustainable rally than China, which looks like a poor quality. Nobody knows why it's going up. The earnings, Ps are very high. I think it's a poor quality rally. So, but still people on the margin who are already in all these markets may be still trying to catch a bit of that because it is a big part of the index. But I think India is high quality and there's a lot of interest. We also are seeing a very big change from, not from last year, but from the previous 5-7 years. Very, very serious change in interest.
Having said that, 2014 was a spectacular year, both for the market, for your own funds.
Correct.
2015 has now started on a special note. Do you think it might end that way, being a lukewarm kind of a year, not paling in comparison to the previous year, the way earnings have led us so far this year?
Well, there's no question that you cannot have a 2014 type again. We've had only 3 or 4 such years in our life, which is 99, 2007, 2014, and 1 or 2 other years when I was in Alliance. That was way beyond what anybody expects. In fact, it makes people nervous when it is so good. So the expected return is 15%, 12%, 18% in dollar terms. This year, we are on course for that. We have already achieved that actually even till today. But the point is that that kind of a return is what people are coming for. If they get more, it's a bonus. But there is no comparison with last year. Last year was a gift which many people refused to take. But now it's a bit harder. But I think it's a good market right now. And I think all the changes that are happening and some which are not happening, pure and simple, shameless politics, that also will get sorted out plus minus 5, 6 months, 3 months here or there. Because there's a limit to how much you can be proud of the fact that we have blocked this bill in Parliament and how happy we are that we blocked something which we presented. You can say that BJP did the same thing. But I think the public is not interested in the tu-tu-meh-meh between parties and acting happy and proud of these facts. So I think these will get done if they can't see the momentum in favor of many of these changes. The people who are opposing them will lose.
Let me ask you for a candid answer on this one though, on earnings. Because, we've been discussing this recovery in earnings for quite a while now, maybe almost a year. Is it frustrating you that there are still no great signs of an earnings pickup, something which the market is beginning to look a little overwrought about?
No, I am not. Because the thing is that, first of all, as I've said again and again, concurrent earnings don't matter. Your valuation should have become very high. Then you can question. Right now, if you look at it, our Ps must be in the range of, say, 6, because 1 year has also passed. And so today, if you look at 2017 or 2016 earnings, they're like 16, 17 times. Now, you can say that this year earnings growth, by the way, even now, this year's earnings estimate from the market are about 15%. Which is not very bad. Let us say it comes out to be 10-12%. My feeling is that if earnings this year are lower, which they could be 1 or 2% here or there, it will make up in the following year. Because ultimately, it's like a spring. You can't compress it beyond a point. But there are many sectors where we are very negative and we don't understand. Actually, I don't even understand the other point of view. I don't even understand how somebody can be bullish on many of these things or expect earnings to be high. In the telecom sector, for example, not only have you paid billions of dollars in spectrum fee, not only have your business model been shaken to the core, and that people are talking about earnings, they don't matter. In some of these, earnings don't matter. Because your future is at stake and it is not bright. But some people want to analyze earnings and earnings they can analyze. But in general, earnings are not, by the way, do you think China, the earnings are any different? I don't think so. So we are going to be in that broad range of 13, 14, 15%, maybe 1 year. And then you will make up. Because all the macro elements are in place. And we have seen it in the past that nobody knows. Let's look at the tech sector. Tech sector, by the time they come out with their guidance for next quarter, 1 month is already over, right? Mostly, say 15, 20 days. Most of the guys give specific orders. It's not that they produce something which gets sold into the rural, so you will know later whether it got sold or not. Even they can't talk about 1 quarter. So we know that in a big picture sense, talking about earnings for one quarter, 1 year is very difficult. But philosophically, big picture, thematically, looking at history, looking at our share of corporate profits to GDP, looking at our GDP growth, we broadly know what kind of earnings growth we have got in the past. And there's no reason, and there's so many reports that have come out, that it comes around to a range of 15% kind of number, not year on year, but annualized over a few years. So we still stick with that thesis.
At this point, we'll slip into a break. We are back with Crystal Ball with Samir Arora after this break.